Hello, I am Dr. K. Misra from our classes. I welcome you all to my YouTube channel Art Classes. This video tutorial is on multiple choice questions on financial management. This is part 7. Now come to the question number 1. The addition of all current assets investment is known as A. Net working capital, B. Gross working capital, C. Temporary working capital, or D. All of these. The correct option is B. Gross working capital. 2. When total current assets exceeds total current liabilities, it refers to A. Gross working capital, B. Temporary working capital, C. Both, or D. Net working capital. Correct option is D. Net working capital. 3. The weighting of equity in the total capital is 1 by 3, that of debt is 2 by 3, the return on equity is 15%, that of debt is 10%, and the corporate tax is 32%. What is the weighted average cost of capital, that is WACC? If you apply the formula, so correct option is C, 9.533%. 4. Which of the following would not be financed from working capital? So here correct option is D, a new personal computer for the office. 5. What is the difference between the current ratio and the quick ratio? So here correct option is A. The current ratio includes inventories and the quick ratio does not. 6. Which of the following is not a metric to use for measuring the length of the cash cycle? So here correct option is A. AC test days. 7. Which of the following working capital strategies is the most aggressive? So if you compare, you will find C to be the correct answer, making greater use of short-term finance and minimizing net short-term assets. 8. Which of the following is not responsibility of financial management? So the correct option is C. Preparation of the firm's accounting statement. 9. Which of the following are not among the daily activities of financial management? Correct option is A. Sale of shares and bonds. 10. Debt equity ratio is 3:1. The amount of total assets rupees 20 lakh. Current ratio is 1:5:1 and owned funds rupees 3 lakh. What is the amount of current asset? So if you calculate, you will find it to be C, rupees 12 lakh. 11. Banks generally prefer debt equity ratio at, normally it is C, 2:1. 12. An asset is a, correct option is B, use of fund. 13. If a company issues bonus shares, the debt equity ratio will be, correct option is C, will improve. 14. In the balance sheet, amount of total assets is rupees 10 lakh, current liabilities rupees 5 lakh, and capital and reserves are rupees 2 lakh. What is the debt equity ratio? So here, if you calculate, you will find none. Rather, correct option is D, none. 15. In the last year, the current ratio was 3:1 and quick ratio was 2:1. Presently, current ratio is 3:1, but quick ratio is 1:1. This indicates comparably B, higher stock. 16. Proprietary ratio is calculated by, correct option is D, proprietor's funds total upon total. 17. Current ratio of a concern is 1. Its net working capital will be, correct option is C, nil. 18. Authorized capital of a company is rupees 5 lakhs. Say 40% of it is paid up. Loss incurred during the year is rupees 50,000. Accumulated loss carried from last year is rupees 2 lakh. The company has a tangible net worth of, the correct option is C, minus rupees 50,000. 19. Current ratio is 4:1. Net working capital is say 30,000. Find the amount of current assets. So if you calculate, here you will find it to be rupees 40,000. 20. Current ratio is 2:5. Current liabilities is 30,000. The net working capital is, say, here it is minus 18,000. 21. Quick assets do not include, correct option is D, inventories. 22. The ideal quick ratio is, the correct option is B, 1:1. So this was all about this video tutorial. I hope that you have liked it, and if you have liked it, please do not forget to subscribe my YouTube channel Art Classes and press the bell button and pass it on to others, those who are needy now and in the future. Thank you. Please like, share and subscribe. Thank you very much. Have a nice time. Best of luck.